And how do we look at this particular downfall of the, what does it mean for the ordinary Indians? What does it mean for the Indian economy?
Thank you for that opening question. And since you said that many of the audience are not economists, I'll try to explain it in as simple terms as possible. I wouldn't call the rupee's fall today a free fall. It is, of course, depreciating. And why do currencies depreciate? Currencies depreciate if economies are having a current account deficit and if capital is outflowing. Those two things are happening in our economy today. What are the services from the rest of the world that we export to the rest of the world? Our import cost has gone up. In who would otherwise have made investment would not go for. Government has big investment plans, but if oil price is high, it cuts into the tax revenue, and therefore they'll have that much. They might have that much less for expenditure on they won't cut into the tax revenue, but they might have to spend more on subsidies, so it might cut into their capital expenditure. So growth will be impacted negatively by high oil price. Similarly, of course, inflation will be impacted because oil price is a big variable, as we discussed earlier. So growth there'll be downward pressure on growth, there'll be upward pressure on inflation because of the oil price. And at this time, it's not clear what the trend will be over the next few months, indeed over the next few years.
Right. So, but in terms of India's own policies on oil, we have also, the deregulation policy, which has now been existing for the last couple of years. In what ways can India actually take a relook? Because a lot of time, the moment we talk about oil prices, the conflict seems to be, how do you cushion in the impact? How do you cushion in the consumers from the direct impact? And also at the same time, ensure that the oil companies are not bleeding because the report cards seem to be in the red. So this balancing act it seems to have become even more challenging in the current circumstances.
Certainly, and there are no painless options to this. As much as we import 80% of our oil requirement, and oil price is high and is expected to remain high, that pain has to be borne by somebody in the economy. It's got to be either the government by giving subsidies to consumers, or it's got to be the
right.
So one of these three actors will have to bear the pain of the high oil price. And at the moment, I think the pain is being distributed across all the three actors. The government has partly subsidized consumers by cutting fuel taxes. Oil companies have not raised prices as much as the crude oil price. The crude has increased, so there's not been complete pass-through. Consumer cost of high oil price is distributed among all these three now, and there is no in the medium.
I think Dr. Sukar,
sorry.
There seems to be a little freezing as far as the technical connection is concerned, but go ahead, sir. I think I can hear you now.
Yeah, in the medium term, we can do two things. One is to diversify our sources of import oil. And the second, of course, is to find non-renewable sources of energy so that we can exit out of fossil fuel dependence. These are medium to long-term plans, but I think we should be working on them. I'm sure the government is working on them, although we, at the consumer level, we're not sensitive, or we don't know about all of that right now. But those are the things we should be doing in the medium to long term.
So that brings me to my next set of questions, and in another few minutes, I'll open up the floor and take in the questions that have already started coming in our chat box. You look at the issue of India's fiscal deficit at the moment. I mean, from the Controller General accounts, you're looking at a 12.3%, the Indian government's fiscal deficit for the annual budget target of 2022-2023. Your broad, points about the state of the Indian economy at the moment, because on the one side, we do see the government making a lot of claims. And there are various figures that are put in. Somehow the numbers also seem to be increasing from $5 trillion to $20 trillion, depending on who is talking about the aspirations for the economy. But realistically, since the last 2 years of the pandemic and the current state of the economy, if you could give us your assessment of how you see the Indian situation.
There's much celebration about the fact that output last fiscal year, 21-22, has caught up with the pre-pandemic higher than that. In a mathematical sense, that is true. That GDP in 21-22 fiscal year was as much as GDP 2 years ago, 19-20, before the pandemic hit us. But that is a wrong comparison. What we should be looking at is actually what is the output compared to what it would have been had there been no pandemic. In the absence of the pandemic, what would have been the output and what is it today? If you do that comparison, you will notice or you will find that output today is actually about 5 to 6 percentage points below what it would have been had there been no pandemic. So the first point to note is that there's been a permanent loss of output. Second, of course, there's a lot of celebration about the fact that we are the largest, the fastest growing large economy in the world, which is true. That's something to be happy about. But we must also note that growth slumped in the pandemic year. It actually declined by 6.6%. So when growth goes back up, we have, because we have a catch-up potential, we grow faster. But that doesn't mean that it's okay to be happy about that. But the challenge really is to maintain a high growth rate. And that's going to be a big challenge. So what I want to say is that we caught up with the pre-pandemic growth rate in a mathematical sense, but we're still below the pre-pandemic growth. And going forward, we should look at what's going to drive growth. If we have to, one of the biggest things about the pandemic has been that the burden of the pandemic has fallen on the poor people, the low-income segments. They've lost incomes, they've lost livelihoods, they've lost jobs. So not only should we look at the aggregate output, we should be looking at have the low-income segments caught up with life. And if you ask that question, you will realize that they have not. Jobs have been lost, their incomes have not caught up, they're still vulnerable. So our consumption, private consumption in the economy is still lower than what it was before the pandemic. So going forward, not only should we be focusing on the aggregate output and the growth rate, but we should be also ensuring that the benefits of growth go to the low-income segments. In other words, focusing on job creation, on safety nets, and on reducing vulnerability of the low-income segments.
But do you sense that we are still in a phase of jobless growth right now? I mean, there are millions of women who have been forced out of the workforce because of the pandemic. The non-agricultural jobs in particular have been lost in huge numbers.
Oh, yeah, most certainly. As far as joblessness or unemployment is concerned, it was a big problem. It is a big problem, independent of the pandemic. If you ask me what is the biggest problem of the economy, I would say it is unemployment. Nearly 12 million people join the labor force every year. We're not able to create even half as many jobs. And jobs have been lost even absent the pandemic because the economy is formalizing, shifting from labor-intensive informal sector to labor-saving formal sector. Jobs have been lost. Then the pandemic came on top of that. There are some estimates that nearly 10 million jobs have been lost because of this, and the evidence of that is all over. You pointed out yourself. If you look at the proportion of labor in the agriculture sector, which should actually be declining, has gone up. That's a regressive trend. If you look at the employment to population ratio, that's gone up. If you look at the demand for Manrega, which is the employment guarantee scheme, that's tapering, but still higher than the pre-pandemic demand. So there is quite a bit of joblessness. This problem is on top of a structural unemployment problem. So I believe that it's possibly the single biggest problem for the economy today.
So when you talk about this jobless growth situation, I mean, the way to address it moving forward is, we recently heard the Prime Minister put out instructions that 10 lakh jobs are to be created in the next 2.5 years, which was read by most critics and experts as being essentially related to the upcoming 2024 general elections, when they could create some buzz. But is it about job creation within the government sectors, or the corporate sector has to somehow, that is where the manufacturing jobs need to come in, that the private sectors need to provide more platforms for the creation of these job opportunities?
Absolutely. The government is a small employer in relative terms. Of course, the Prime Minister said 10 lakh jobs have to be created. That's 1 million. 1 million jobs over the next 2-3 years is a pittance compared to the size of the problem. So jobs have to be created in the non-government sector, not just the organized corporate sector, but in the informal economy as well, in the small and medium enterprises. And there is a view today that the service sector is going to create jobs. Yes, the service sector is going to create jobs, but not in the numbers that we really need. So if we need to even make a dent, even make a small dent on the size of the unemployment problem, we need to go back to the manufacturing sector. And like you pointed out, it's not just the large corporate sector, but even the MSME sector. Today, I was very pleased to see that the Prime Minister spoke about the emphasis on the MSME sector, because the MSME sector, that's medium, small and medium enterprises, that is job intensive and export intensive. So if you want to focus on exports, if you want to focus on jobs, MSME is the route. I think we should be focusing on that. The PLI scheme is a good thing. It's, I believe, taking off the production-linked incentive scheme to attract global value chains. There is some criticism that it is large corporate sector, it's not job intensive, etc. But I'm hoping that for every PLI investment, there are forward and backward linkages in the MSME sector, which would create jobs, not just in manufacturing, but in services around the PLI scheme. Just imagine this, if there is a large corporate setup, there's a large steel plant setup, we all see visibly a lot of economic activity around that. We see restaurants, shops, trade, a lot of things coming around that. So there is a lot of multiplier effect of the PLI scheme. I hope that comes through.
Right. Okay, let me also, in fact, bring in some of our audience questions now, sir. And I would request all those who are tuning in to keep putting in your questions into the chat box. We have a question from Ayush Srivastav, who is asking, what will be the impact of the black swan effect that the RBI's recent report is talking about, where it says 7.4 lakh crore capital outflow might happen?
I'm not sure how black swan is connected to why. I mean, I know what a black swan is, but yes, not understanding the question very well. A black swan is a low probability, high impact event. Okay. This capital outflow that's happening now, I wouldn't call it exactly a black swan. The capital outflow that happened during the tame tantrums in 2013, when I was governor, I would say that was black swan. But what's happening today is, I would say, out of the ordinary, but I wouldn't call it a black swan event, because a lot of capital came into the economy during the pandemic years, when there was quantitative easing in advanced economies. Some of that money came in emerging economies, including India, in search for quick returns. And now that capital is going back, as we talked about at the beginning of this conversation, because the Federal Reserve has increased the interest rate. As a consequence, the rupee is depreciating. There is downward pressure on the rupee. And some depreciation is par for the course. I don't think we should worry too much about it. There is cost to depreciation, as I said earlier. It has inflationary pressure, but it also has some positive, like encourages exports. So depreciation is not necessarily a completely bad thing. Not that we should actually encourage depreciation, but if some depreciation is happening because of fundamentals, I don't believe the RBI should stand in the way. What RBI should be doing, in my view, is not to change the trajectory, but engineer the movement of the rupee along the trajectory so that there is no volatility.
So if I could go back to that report by the research firm Nomura, the Nomura India Naturalization Index, that also underlines that, of course, India is the only Asian country whose inflation is furthest above its target at the moment. And when you talk about the impact of the US recession on India's growth forecast in the months to come, what do you see as the biggest areas of impact, sir? What is it that India needs to brace up for?
If the US goes into a recession?
Yes.
Well, if the US is a large economy, the largest in the world, and what happens in the US impacts the rest of the world. Okay. Now, it depends on how the US is going to deal with that recession. If the recession comes, obviously a recession is expected because people around the world, notably economists and analysts, expect the Fed to be very, very hawkish over the next few months to kill inflation. They will do that by raising interest rates. And if Fed raises interest rates, the American economy will be negatively impacted. We go into recession that will have knock-on impact on the rest of the world. The most direct impact on India will, of course, be on the rupee. We talked about it. There might be instability in the exchange rate. Then on export potential, if the US goes into a recession and there's knock-on recession in Europe and in our export markets, export potential will be dented. Then we have to look at what that does for investment within our country. Our growth might be dented. But one silver lining, if I might call it, which may not completely compensate for it, is that if the US goes into a recession, oil price might drop a bit. Okay, yeah, that's a possible silver lining.
I think Nisarga has a follow-up question, wants to know which are the sectors that will be largely impacted by an economic downturn of that sort.
In India?
Yes.
I think the export sectors will be impacted because, to the extent that we export what is chemicals, we export pharmaceuticals, we export some low-end manufacturers. I think low-end manufacturers will be most affected. But I really, I'm thinking on my feet, as it were, because I've not, gone into granular details of this.
Right.
But export sectors will be affected. But those sectors which cater to domestic demand may not be affected so much.
There are two quick questions. One, Gaurav Singh is asking, is it possible to have lowering of inflation with job creation? And Sandeep Sharma wants to know, what should the RBI do to control the dollar rate?
Yeah, see, lowering of inflation means high interest rate, right? RBI needs to raise interest and is killing, in some sense, the intended impact or the motivation is that the high interest rates will dampen consumption and investment. So, and reduce demand and reduce inflation. That compromise or that sacrifice of growth of consumption and investment, and thereby on growth, as a consequence of high interest rates, is in the short term. In the medium to long term, low inflation is good for the economy, good for growth. But in the short term, because you're combating inflation with high interest rates, it will have a negative impact on growth. We've got to accept that. To that extent, it'll have a dent or it'll dent job creation. That's a consequence of combating inflation. I'm not sure there are any painless ways of doing this. On the other question about what the RBI should be doing about the rupee depreciation, what RBI should do, should the RBI want to prevent the rupee from depreciating, is to sell dollars from its foreign exchange reserves to raise the price of the dollar and to depress, to raise the price of the rupee and to depress the dollar. Whether RBI should do it or not is another question. As I said earlier, I think RBI should gradually allow a depreciation of the rupee and intervene very modestly, only to prevent volatility. Intervene marginally, but not prevent every downward movement of the rupee. I think that's good for the economy because ideally, the exchange rate must reflect the fundamentals. And if the fundamentals of the economy demand that the rupees lower a bit, I don't think it'll be appropriate for a policy institution to will be felt elsewhere in the economy.
Also, of course, we have seen the central banks take for aggressive rate hikes, the US Federal Bank being no exception there. When it comes to, and there is actually a question, in fact, from an audience here, Mallikarjun, I'm just trying to look at the question there. If you will just give me a second. Mallikarjun wants to ask you, what is your view about RBI not making a report for missing inflation target? Is the logic of CPI numbers not getting credible appropriate for not doing so? There have been a lot of media reports recently, sir, also talking about the Monetary Policy Committee and the kind of tussle that it has entered into with the government, especially on when it comes to rate hikes or also in terms of the inflation targets itself. Give us an insider view of how things were when you were at the helm of affairs, and then, of course, throw some light on what you make of the current situation, sir.
Okay. First, about the RBI forecast of inflation, which is Mallikarjun's question. It's difficult to make a forecast of inflation at the best of times, but the RBI is mandated to make a forecast because their core mandate is to manage inflation. For that purpose, they need to make a forecast of inflation, and they're best equipped to make that forecast, and they're expected to make the most accurate forecast of inflation, more accurate than any analyst or any other policy expert. But even central banks can be wrong-footed in making their forecasts, and the error will be higher in uncertain situations. And today we're going through an extreme uncertainty, tightening financial conditions around the world. So it is par for the course that there is some error, but the RBI, I'm sure, is trying to minimize those forecast errors. I also want to say that RBI is not as if RBI is unique or an exception. Most central banks have gone wrong or have erred in making inflation forecasts, most notably the Federal Reserve. So we've got to give some leeway to central banks. But I'm sure that RBI within the system is trying to improve their forecast. Now, to your question, Smita, about the MPC. The MPC is a creature which has come after I stepped down from the RBI. Now, when I was governor, the governor used to decide the policy by himself, of course, consulting all the stakeholders, consulting the Technical Advisory Committee, whose also TAC was comprising of experts, but their advice was not mandatory like it is today. So the governor used to decide. I think the transition from a single individual, the governor, deciding the policy to an MPC deciding the policy is a good one. It's a tested practice. It's proved around the world. And we borrowed that. And so far, over the last 4 years, 5 years, since we've embarked on the MPC framework, it's delivered good results. When I was there, we used to release the TAC minutes, of course. But the criticism against me was that I deferred from the TAC most of the time.
That you vetoed a lot of decisions.
Excuse me?
A lot of people would say you vetoed some of the decisions too.
Yeah, vetoed in the sense, yes, but as I said, their decision is not binding, but I did not take their advice. But they used to ask me why, and I can only hazard an explanation of why that happened. You know, as the governor, as a full-time top executive of the central bank, you get a lot of information, apart from all the analysis that your own staff give from the markets, from around through a process of osmosis. We used to brief the members of the TAC, our analysts, our staff members used to brief the members of the TAC, but that is still not the same thing as being a full-time staff member of the RBI, or the governor or the deputy governor. The second difference between then and now is that the accountability for delivering on low and steady inflation was entirely on the government. Today, the accountability for delivering low and steady inflation within the inflation target is on the MPC. So I would think the MPC system is a better one because 6 heads are better than 1. And there is accountability for the MPC. There's much greater transparency. There is private experts from outside the system. So to some extent, we go beyond, or we have some, what should I say, something to fight groupthink, that we don't become a hostage to groupthink or have tunnel vision. It's a good thing. And I think the MPC system has worked quite well. About differences between MPC. If there are differences, I think that's a good thing. That's a healthy thing. That there is debate and discussion, and there's some consensus or some policy emerges out of that. So I wouldn't think that every difference among members of the MPC is a cause for concern.
I think Mahesh actually wanted to probe a little further and asked you if there were certain specific situations or standoffs that you may want to talk about and share from your experience. And I think because these are all future policy makers too, they would be interested to know that when a political standoff happens with a government, say for this instance, it's a very strong government led by a very strong prime minister. And sometimes decisions that politically may be needed to be taken, but economically they may not be sound. How do you deflect the pressure under that situation? What do you do?
Yeah, first of all, I want to start with a caveat that I cannot speak for this government or this present system of present establishment in the RBI, present management of the RBI. I can only speak from my own experience, which is the previous government and my stint at the RBI as governor. There certainly was pressure from the government. I wrote about that in my book, and I've made no secret about it. Of course, I did not speak so much about it when I was governor, but after I left, I did speak about it. And neither Mr. Chidambaram nor Mr. Pranab Mukherjee, Mr. Pranab Mukherjee is no more, but he was there when I released the book. Neither of them contested that. So there was pressure from the government that the RBI must cut interest rates. I would say from their own perspective, it was something to be done. I'm not necessarily saying that they were wrong and RBI was right. I'm saying that their worldview, their understanding of the macroeconomic situation, their compulsions demanded that the RBI maintain a low interest rate regime. On the other hand, RBI under my management believed that we needed to have higher interest rates to combat inflation. So there was standoff. Sometimes it was quite uncomfortable, but yes, they were precious.
Right. And I think it's a skill that you also learn on the job. We are hoping that many of our students can also learn in the years to come. Going back to the audience questions, sir, I think there are two specific questions. Swati Rathore, she asks, how can we get women back to the workforce? Reminding that India, of course, has a very low percentage of women in the formal workforce. And Gargi wants to know how India can ensure the sustainability of the existing labor-intensive sectors and guarantee employment to the upcoming workforce while also keeping up with the modernization.
Smita, I think you were frozen for some time. Can you please repeat that question?
The first part was on the women. How do you get them back to the workforce, keeping in mind that even the pre-pandemic Indian women numbers in the workforce was so low?
Yeah. That's on the second question, second part of the question.
Second is, how can India ensure the sustainability of the existing labor-intensive sectors and guarantee employment while also looking at modernization of the workforce?
Okay, thank you. Those are two very important questions. First, let me talk about a female labor force participation rate, that acronym people talk about. The female labor force participation rate in India is low, which is quite disturbing, and is also falling. Our female labor force participation ratio is lower. Of course, ratio is lower than in advanced economies. But India's rate is lower, even as compared to our peer developing countries, and even compared to countries in South Asia, such as Bangladesh. This is a very disturbing trend. And you can all understand why. If our women are not working, it's an ideal resource. If you can get those unemployed women who are not working, to work and contribute to economic output, there'll be higher output, higher growth, higher jobs, and we can get onto a virtuous cycle. I wouldn't put it down to pandemic or anything. There are structural factors responsible for this. A lot of people attribute to this cultural factors, women are not allowed to work, etc., etc. I don't believe that. You know, I don't think, if it is cultural factors, there is no reason why it should be falling. If anything, it should be improving, because culturally we're getting more open, and we're no more culturally closed than other South Asian economies. So I think we should look for some structural factors to explain this low and falling female labor force participation rate. One, I think, is, as people say, I've looked at some people who have done surveys and research on this, that women are staying longer in schools and colleges, and they're getting higher education. Therefore, the rate at which they're coming into the labor force is falling. That could possibly be true, but that can be a transition problem. It cannot be a permanent problem. I think what is a permanent structural factor is that the economy is not able to create jobs for women who have high school or just about early college education, low and low skill or semi-skilled jobs for women in proximity to where they live. If you go back some 15 years ago, 20 years ago, women used to work in agriculture, labor, right? But now agriculture is sharing labor, requires less labor, and therefore women are pulled out of that, but they have nowhere else to go. So I think the reason is that we are unable to create semi-skilled, low-end jobs suitable for women who've had high school education, who want to work in proximity to where they live. And that's going to be the big challenge, and that's what we should be focusing on. And if we actually focus on medium and small industries and the rural infrastructure sectors, I think there will be some job creation that will be suitable for women. On the second question, can you remind me?
On the labor-intensive sustainability ensuring of the existing labor-intensive sectors
Oh, okay,
while
okay,
you
yeah.
modernize.
Yeah. See, I've heard this argument that as the economy gets formalized, I spoke about it myself earlier in this conversation, the corporate sector is less job intensive. So are we going to lose jobs? Yes, if we focus only on the corporate sector, and that's going to, take away business from the informal sector, yes, it's going to be a less job intensive economy. But that need not necessarily be the case. We can have the corporate sector investing in the high-end sectors. At the same time, we can have low-end manufacturers in the MSME sector, in the unorganized sector, in the informal sector. Just, we import, let me give you this example. We import $100 billion worth from China. And much of that is low-cost goods. So if you can actually improve our productivity and make that in India, that'll create jobs, and that'll not taking away from the corporate sector. While we have the modern large corporate sector growing, we can also have the small MSME sector and the unorganized sector, informal sector growing as well, creating jobs. So I wouldn't see that as neither or question.
Okay. It doesn't have to be mutually exclusive. It needs to move together.
Yes.
Also, I think there are two important questions. One, Suraj wants to ask whether the RBI will print more paper currency this time to contain the effects of inflation. And Piyush wants to know if this is a case of imported inflation.
Yeah, first, let me answer Piyush's question, which is that it's certainly a case of imported inflation, because it's food and fuel. And fuel prices have gone up because oil prices have gone up. Food prices have gone up also because of world food prices haven't gone up. So to that extent, it is imported inflation. But at the first order level, it is imported inflation. But if that inflation is left unchecked, there's a risk of that inflation getting generalized, that prices of everything else goes up. So in the first order, I would say it is imported inflation. But as that works through the system, we can get into generalized inflation. That's the reason why RBI is acting, even though it is triggered or fueled by fuel and inflated food prices. RBI is acting in order to keep inflation expectations low so that inflation does not get generalized. On the second question about RBI printing currency, circulation, okay? But yes, to the extent that the reserve money goes up, which is by RBI printing money, the easy money policy that they ran for the last 3 years to provide comfortable economic conditions to manage the impact of the pandemic. But over the last 3 months since the April policy, RBI has said that they are now going to withdraw that accommodation, which means that they're going to withdraw some of that money that they have printed. They've raised the CRR, they're conducting, they're withdrawing money by variable rate repo auctions. What else they will do, I do not know, to withdraw the money, but if they prevent depreciation of the currency, that also results in some withdrawal of liquidity.
In fact, Prachi is actually asking a related question as to how does the inflation affect the supply of money in the economy? And I think Sudeep Mondal, you wanted to ask about how to balance inflation and growth. which I think Sir will answer. But on the other question that you've asked, he already spoke about the rupee declining against, of course, the dollar. Were you able to hear my question, sir? I think we've been losing your connection in bits and pieces.
Was it me or I? You or I?
I know there's a little problem with the connection at your end, but
from my side.
Yes, unfortunately. But so just to repeat, sir, how does inflation actually affect the supply of money into the economic system?
Well, as Milton Friedman said, inflation is always and everywhere a monetary phenomenon, which is that if there is too much money chasing too few goods, there will be inflation. So to some extent, today's inflation is a consequence of RBI's easy money policy, which they had to do. I'm not finding fault with that. They had to run an easy money policy by printing currency and increasing liquidity during the pandemic years.
Sorry for the technical difficulties that we seem to be experiencing. And I know that there. So if you're back with us, if you could go ahead and repeat yourself. Okay, so I think there are a lot of questions that have come in our chat box, which is flooded. And in fact, in the last few minutes, we will not even be able to accommodate all of these questions. But we are just hoping that if Dr. Subba Rao is back in the next 5-7 minutes, we will be able to conclude some of these questions. Pradyumna is asking, what policy measures can the government take to boost the manufacturing sector and innovation in India? And also the causes of inflation, which is a question by Prachi. Aditya Vikram has an important question on what would be the effect of privatizing public sector banks, which is, I think, an important political issue too in terms of the Indian economy. Dr. Subba Rao, I'm afraid, I think we seem to have lost his connection, but we will be sharing all your questions that you have sent in on the chat box with him as well, and hoping that we can have him back for another session soon, given the kind of technical issues that we have faced today. But I think we will just give it a minute or two before we end the session to see if he can rejoin. Yes, sir. Hi. If you can unmute yourself, sir. Thanks.
I'm sorry about that. It doesn't often happen, but it happens exactly at the right moment.
It's all right, but good to have you back, sir. If you could go ahead with the answer that you wanted to finish.
The question was about the tension between inflation and growth, right?
Yeah.
I've already answered the question about inflation and money supply. Now about inflation and growth. I've partly responded to that earlier, but let me explain it once again. There is tension between policies to support growth and policies to combat inflation. When inflation is high, central banks are required to raise interest rate, and the intention of raising interest rate is to curb demand. To the extent that demand is curbed, it dents growth. So there is we should not be surprised that growth is impacted because of policies to combat inflation. But as I said earlier, that compromise on growth is only in the short term. In the long term, low and steady inflation is a good thing. RBI research shows that actually if inflation is below 4%, it is supportive of growth. If inflation goes beyond 4%, it militates against growth. And if inflation goes beyond 6%, it is corrosive for growth. So I would say that in the short term, there is tension between growth and inflation. and some compromise in growth is inevitable if you want to bring inflation from very high levels to within the target band, but that's only in the short term. In the medium term, we stand to benefit.
Has RBI failed as far as inflation control is concerned?
And that's a very blunt question. I'm afraid I cannot give a blunt answer, but to the extent that inflation today is above the RBI's inflation target band and is expected to remain above that band for much of this calendar year, it is, RBI has not conformed or fulfilled its mandate. Okay. But as I said earlier, RBI is not alone. Most central banks around the world have crossed their inflation targets, most notably the Federal Reserve, the ECB, UK, except Japan. Every other economy and some other, China is not having inflation, Indonesia is not having inflation, but most large economies, particularly advanced economies, are having inflation problem. And the gap between their target inflation and current inflation is wider than it is for us. So I would say that RBI has not fulfilled its inflation target mandate at the moment, but they have said that they expect to get there early in the next calendar year.
Right. I think that speaks volumes of what you've already said here. But Dr. Subbarao, I'll just take the last two audience questions here because there are a lot of questions and we frankly don't have time for it. Avinash wants to ask you that, since the share market is touching a 52-week low, is there anything that is signaling a market crash? I mean, more often than not, we of course say that markets are not a reflection of the larger economy, but how do you look at people, their portfolios bleeding constantly in the share market?
I'm very uncomfortable answering questions about the stock market because the stock market, I don't know what drives the stock market. They're driven more by events rather than trends, right? So if there's if there is suddenly a shooting war between India and China, God forbid, suddenly equity prices go up. Okay, so they respond more to events than trends, but in the long term, I think equity markets should reflect market fundamentals. If there is some correction, it is because fundamentals are correcting. That's what I would say.
Right. I can never wrap my head around what video on YouTube gets views. I think the RBI, the stock market continues to be a confusing sort of an enigma like that itself. But Aditya Vikram wants to ask you, sir, a question that is a hot political question too on privatization of public banks, of PSEs, their impact on the economy and your views.
Yeah, I can give an entire lecture on that. But we will
have you back soon.
But let me try and answer that in one or 2 minutes, which is that, when banks were nationalized back in the 1970s and 1980s, there was a purpose behind that. And I think nationalization of banks served the economy well. It improved penetration of the banking sector into the hinterland of the country. There are bank branches, banking culture has improved. I think our public sector banks have done a great job in penetrating into the hinterland and providing service and, in fact, loans to low-income segments, to agriculture, priority sector. These were all led by the public sector banks. But today, I think we are in a different situation, different economy, different environment, different demands. The public sector banks have served their purpose. So there is the economy today can move on without public sector banks or the government being in the driving seat of public sector banks. So it's important for the government to withdraw from public sector banks so that they also serve their clientele like private sector banks. And privatization has to be a gradual process, but I believe that the government must have started the privatization of 2 public sector banks, which they announced 2 budgets ago, move forward on that, and then put out a plan, a map for privatizing the entire public sector banking structure over the next 10 years, maybe whatever time frame they feel comfortable with. I think that roadmap should be out.
Okay. So I think I saw a question in the audience too, which is something that I wanted to ask. What we are seeing today happen in Sri Lanka, in the neighborhood. Governments have been toppled in Sri Lanka, even in Pakistan. One of the main reasons in Pakistan, again, behind the toppling of the Imran Khan government was the growing anger on price rise, on inflation. And this price rise pinch is hitting the South Asian region itself. What are the lessons to be learned from there for India? What are the red flags for us from this entire crisis?
See, Sri Lanka's problem, I'm more familiar with Sri Lanka problem, Pakistan problem. So let me talk about that. Sri Lanka's problem is a classic twin deficit problem, which is high fiscal deficit, high current account deficit. A problem like the one we had in 1991, and a problem like the one we had during the taper tantrums. Okay, there was a balance of payments crisis in 1991. There was a near crisis in 2013 during the taper tantrums. So the lessons to be learned from Sri Lanka are that as much as some fiscal loosening might be necessary, inevitable in times of pressure such as the pandemic, it is very important to get back to the normal as soon as possible to create credibility. Similarly, about current account deficit, it is quite possible that in odd years, we might have a current account deficit that is high because of some one-off event, a black swan event. Somebody talked about that. But we should not let that persist. So Sri Lanka's problem is partly self-made, partly for reasons beyond their control. We did not go into all of that. But the lesson from that is that we should keep track of the twin deficits, the current account deficit and fiscal deficit. And the third lesson, let me also add, is Sri Lanka also, the government in Sri Lanka borrowed abroad. There was a lot of foreign currency exposure to sovereign borrowing. It's acceptable for the private sector in the economy to have foreign exposure. But when the government has large foreign exposure, it's a different dimension altogether. So another lesson for us is that, which is a good thing, India's sovereign doesn't have much foreign exposure, but we should keep that minimal.
But just to probe it a little further, sir, because in Sri Lanka, of course, all the broad fiscal deficit problems, the financial problems that you mentioned, they've also gone through issues of deep social cohesion or the lack of one. And in India today, when we talk about India's $5 trillion economic ambitions and more, and you have daily incidents of depolarization, can the economic story live in a bubble apart from the social cohesion, story?
Absolutely not. Absolutely not. That is evidenced by our own history of countries around the world. So a social cohesion is an absolute prerequisite for economic growth. And I think we should be focusing on that. Good governance, rule of law, accountability, institutions, and general feeling of well-being across populations, no matter which language, which country, which language, which caste, which community, which religion. I think every Indian must feel part of this great country. And I think that's an absolute prerequisite for the economy to grow.
Are we on a slippery slope there? One that could actually be dangerous for us?
Well, I wouldn't say slippery slope, but there's certainly a sense of some polarization in the country, that there's certain segments of the population feel left out, left behind, that they might get into a second-class citizen status. So that is a concern, and I absolutely, at every cost, we must prevent that feeling.
Right. So I'll just end the conversation with two last questions. Utkarsh, because we just had the GST Council meet, if quick thoughts there is a lot of controversy surrounding there, and I know it will need a lot more time to get into it. But Utkarsh wanted to know if, what could possibly boost the GST process in India. And Farhanaz wants to ask about the budget cuts on employment guarantee schemes, which have discouraged workers and its impact.
Yeah, on GST itself, yes, I have read in the media about what happened in the GST. They've taken some decisions about rate rationalization, etc. But the most important item, I believe, at the meeting was continuing the compensation to states. When GST was introduced, states were guaranteed a 14% increase on GST year on year. And to the extent that there is any shortfall, that was to be made good by a fund created by the center out of a cess collected. So states wanted, I believe some states, the finance minister said about 12 states, I don't know how many wanted it, but I'm not even sure the finance minister's number, but that's my recall from what she wrote in the Indian Express yesterday. So a large number of states want the continuation of that scheme. Now, it's being seen as a center state issue. I think that is wrong. The center is just an intermediary. Center is collecting cess and creating a fund from out of which these transfers are being made to compensate the states. That cess is being paid by every one of us. Every time we buy a good or a service, we are contributing to that cess. So there is some cross-subsidization in this. The question is, should we keep the general tax level high in order to see that state governments are compensated, or should we bring tax level lower, even if state governments have to compromise on lower tax revenues? So we should not see this as a center state issue, but we should see this as who is subsidizing, who is funding the payment of this compensation, and is that the fair cross-subsidization? Okay. The second question is about budget cuts and the
employment guarantee schemes.
Employment guarantee. My understanding is that the employment guarantee is an open budget scheme. The finance minister, I believe, I'm not sure, I stand correction on this, has said that should the budget provision be exhausted, she will make additional allocation for it. I'm not sure if there is, if that is correct. I'm not even sure if there's been any budget cut on Manrega. To the best of my knowledge, there's been no cut. But if there is additional demand, I hope the finance minister meets that demand.
I mean, there's actually been a lot of budget cuts, I think, to the other social welfare schemes, which is a part of the larger budget dialogue. But sir, I would like to end this conversation because it's a young audience, and of course, I remain completely, unable to understand crypto. But RBI Governor Dr. Mr. Shaktikant Das has once again reiterated that cryptocurrencies present a clear danger to macroeconomic stability and the financial system. Your views to end this conversation with on cryptocurrencies?
I agree with the governor that private cryptocurrencies can introduce, will have impact on our monetary sovereignty, monetary stability, or our financial stability, or external sector stability. The fear is that if these private cryptocurrencies come, they will displace official currencies. If they displace official currencies, transactions will move out of the banking system. The central bank will be out of the loop on economic activity. So to that extent, its ability to control interest rate, control money supply, and to manage monetary policy will be impacted. That's the fear. It's not materialized so far, but that is no guarantee that it will not happen in the future. Because there is a new type of cryptocurrencies coming, which are called stable coins, which are linked not to algorithms like Bitcoin, etc., but they're linked to some reserve currencies like the dollar or the euro, which means that if those cryptocurrencies gain currency, our economies run the risk of being dollarized, and our monetary sovereignty might get impacted. Our financial stability could get impacted because these cryptocurrencies values are volatile, as we've seen. I think the Bitcoin was 70,000 rupees last November. Now it's below 20,000 rupees. So it's, maybe it'll go back up again. So if there's such extreme volatility, it will create conditions of financial instability. And to the extent that cryptos can also become conduits for capital outflow, our external stability could get impacted as well. So our monetary stability, our external stability, our financial stability could all be threatened by private cryptocurrencies. But I'm not sure banning is the right thing to do, but that's a decision for the government in consultation with the RBI.
But the parliamentary consultations didn't seem to share the sentiment, of course, that that banning is a solution going forward. But aren't we sending out very confusing signals? I mean, the government wants to tax those indulging in cryptocurrencies, but at the same time, not legitimize it.
They don't. See, there's different interpretations of legitimization. One is that it's not going to be official currency. Okay, so in other words, if you want to pay taxes in Bitcoin, you will not be allowed to pay that. It will not, or if you want to pay a grocery store in Bitcoin, he or she will be within her right to decline that. She cannot decline payments in rupees. It's got to be honored, right? Your grocery store owner. But she can decline payment in Bitcoin. So to that extent, it will not be official currency. But it can creep in, as we talked about. The government, I think, should come out with clear policy on this. You're right that at one level, they want to tax transactions in cryptocurrency. At another level, it's not clear. They've made up their mind on whether they should regulate it, who should regulate it, or whether they're going to ban it. So the earlier the government comes out with clear guidelines on this, the better for everyone, including cryptocurrency operators.
So as I end, I have to ask you this question because today is, of course, 1st of July, and we were expecting the new RBI card tokenization policy to come into effect. Again, there has been a subsequent extension for the merchant payments alliances. But why does every such decision have to be so painstaking for us? Even this payments process has actually turned out to be so painful for most of us, who are either using independent platforms as means of revenues to those who are just for the day-to-day proceedings of just signing up for subscriptions.
But compare that pain that you might go through with tokenization with the pain that you'll go through if there is a fraudulent or cyber attack on your account or on your credit card. So the intent or the motivation behind card tokenization of the RBI is to protect consumers. Because today, all of us are going into digital transactions. We're storing our card details, the number, the name, expiry date, etc., with several platforms, with several operators, with several merchants. And the safety of that data is not guaranteed. It could go into the hands of fraudsters, and people, even educated people, are becoming vulnerable or becoming targets for cyber attacks. So the intent behind RBI's card tokenization policy is to protect consumers from these frauds. And I believe the pain will not be as much as you seem to have indicated, because it is a one-time thing. You go on to Amazon platform, I believe, I've not done it myself yet, but you've got to do it once. Just as you have entered your card details once before and stored there, you got to go through that process once again. Store your card details, buy a token, keep that there, and you're set. Okay. So I don't think it's going to be as painful a process as you've indicated, but I believe the cost-benefit calculus of this, in the short term, certainly in the long term, will be positive.
I think most of us have faced larger issues when it comes to the Apple payments, the international subscriptions and several. But as you said, that I think it's the larger goal that matters here. But thank you so much, Dr. Subbarao. It's been a pleasure talking to you. You've been very patient and kind enough to answer all the questions. Apologies to our viewers for some technical glitches that you had to face, but I'm hoping that we will be able to have Dr. Subbarao in our classroom in the campus at the Kautilya School of Public Policy in Hyderabad soon when the new batch also comes in. And remember to look up the websites for all of you interested in pursuing a master's degree public policy program and go through the Kautilya School of Public Policy website itself. Thank you so much, sir, again.
Thank you, Smita, and thanks for all the best to all the participants. Thank you.
Thank you so much.